So anyway, without further ado, I'd like to call on our founder and chairman, Mr. Edward Lee, to share some words.
Thank you, Francis. Good evening. What I am going to talk about is basically just a summary of what April and Juanes did. I think everybody knows already the conclusion is that the market has gone up a lot from 5.8 to 6.9, which is a target for 2014. And we're now in the consolidation. So we have the magnitude. I mean, we talked about it in early this year that the market we knew that the market was going to go up because the target was 6.9. And the biggest question right now is that will it pull back to what Juanes was been saying, 6.5, 6.7, or would you just consolidate at this level and then eventually, like what April just did, roll over for 2015, which is our target price of 7.8. A lot of people have been asking me whether they should sell their position and reposition when it goes down. I said if I knew the answer, I would be very rich. I don't know the answer, all right? Because things can happen. Volatility outside of the Philippines can create prices to go down, and then it will hit your 6.5 immediately, right? But since we're encouraging more long-term investment, what we need to do is that we have to understand that we need to have the discipline of continuing investing because stocks over time outperform all asset class. Okay, so like what I always do, I just shared where we are today. Very simple. I look at the world in a map, and it's still the same. Japan is recovering, and I'll explain to the reason. The US is still the same. It's very simple. We look at they showed you both the 10-year Treasury in the US. It's not going new highs, more than 3%. So as long as the 10-year Treasury in the US continue to stay at this level, 2.4, 2.5, eventually it might even go down to 2.1, 2.2. You would see that when prices goes down because of events that are happening, it will always be an opportunity for us to deploy. So the Philippines is still the same. Europe is still the same. We're somewhere here. And China trying to recover. No? So let's go to the details. So this is what happened. This is the Japanese market. Japanese market peaked 39,800 way back in 1989. And today, we're in the beginning of a major, for us, what we call Mark Faber called the phase one, which is the spark. We really believe that Japan is a turnaround. After 25 years of bear market, what they call it the lost decade. No? So we really believe that Japan is starting to recover. It's called Abenomics. They elected a new president, prime minister, and he really came out and wanted Japan to be a powerful country again. Right, so I've been working with a lot of people, and I've been showing them why we're very, very bullish in Japan for the next 3 to 5 years. The US, of course, look at all the volatility that we've been seeing. And still today, the interest rates are all-time low. So when interest rates are all-time low, when you look at 10-year Treasury and it's not really doing more than 3%, that means that the US prices will continue to do well. Now, in between, you might have their 5 or 10% volatility, but this will be an opportunity for us to be able to participate. No? So remember, market crashes are also needed to increase our returns. No? So if you are investing in the stock market, you have to expect that volatility do exist. And every year, at least once a year, you would see 5, 10% pullbacks. And please, don't be scared about it. Philippines, of course, like what April has been saying, is that Juanes has been saying that we're still in consolidation, so there's really nothing going on, because when we were looking at early this year, there was 5.8, 5.9, now it's about 6.8, 6.9, which is the target price of April since early this year. So market can go down somewhere 6.5, 6.7, or it can just stay here sideways before it just goes up, which is what April showed you in her earlier slides. No? That she believes that the market will just stay sideways here, and eventually the target for 7,800 for 2015. Of course, Europe, same. That's the reason why this is continuously being pushed. Prices have been going up due to negative interest rates. That's what April and Juan has been telling you. As long as the 25-30% unemployment in Europe, the market will not really recover. I mean, they can stimulate as much as they can, but it's not sustainable when there's really no revenues coming in. The last, of course, is China. China is still in the bear market for the last 5 years, and there's some spike for the last few weeks, mostly on short covering, and of course, they're saying that the economy, the GDP has bottomed, and it's going to go up. But of course, we still believe that China has an underlying problem, no? Wherein there's just over excess capacity. So it needs a few more years of consolidation. What I'm going to talk about today, this is the 10-year Treasury, which is the reason why there was a big sell-off last year was because of this gap between the 10-year Philippines and the 10-year US went down to 67. So in other words, it narrowed too much. So now we're at 170. So as long as the gap is there, the 10-year and the 10-year US and the 10-year Philippines still gaps at more than 170, 200 basis points. Nothing to worry about in the Philippines. When it shrinks, when it goes down to about A70, 80, then that's the time we'll be too worried about. But today, we're not worried about the Philippine market going down because of another tapering or whatever. What we're going to share you is what April showed just now. And I want to show it to you in graphic form. No? Demography is destiny. I was in a talk in Clark with the Catholic Bishop Pension Funds. And the first speaker was Dr. Boom, which is Dr. Bernie Villegas. And he said that just on the demographic of the Philippines, even if you elect Pacquiao, the next 30 to 50 years, the Philippines will still be 2,000. By 2060, we'll be number 16 in the world. And that's what April was saying. No? And I'm just going to show it to you in very simple terms. The long-term economic fortune of the nation depends on large population, young and productive citizens, growth of the aspirational of the middle class, which April talked about a while ago, and a supportive environment for growth. This is the Philippines. Here. This is China, India. This is the top most populated countries in the world. So the Philippines is number 12. Number 12. So let's look at it carefully. Look at this distribution tree. Look at that old age. Look at the US. Right? This is the baby boomers. And then it's going down. This is the United States. This is the male and female, the number of population in millions. Look at China. China has a problem also because of the one-child policy. If they don't solve the one-child policy, continuously China will be shrinking. China will be shrinking. This is Germany. Look at it. Right? Look at the population. Very simple. You just look at this distribution tree, population in terms of millions. You would see where you want to be investing on a macro trend. Just by looking at it. It's very simple. Look at the reason why they don't like Japan, because of the same thing. There are more old people than young kids. So look at this. That's one of the reasons why most of the economies are very skeptical about Japan. And what is the reason why we're very bullish is because Japan is opening up. They're opening to tourism, they're open to immigration, they're bringing down the corporate income tax. So they shot at 3 arrows already to encourage people to stimulate the Japan economy again. So look at the population. Old population, very young. Now look at the Asia Pacific. Look at this. India. Do you see how beautiful it is? Galing ba? Ang ganda, no? So beautiful. Look at it, right? The reason why the population is less here is because of what? There's so many infections there. Hey, how many people have gone to India? Bring your antibiotics and it doesn't work. So you have to see how it works. They continue to have babies at one of the poorest area in the world. But still, look at it. Right? That's why you can see a lot of Indian all over the world. Huh? But look at it. India, no old people. They all die early. This is Indonesia. Look at it. Same thing. I think the biggest reason is nutrition. No? If you don't have enough things to eat, you will have a problem later, really. So look at Indonesia. This is the same thing. The average age, they die. Old people die. But look at the population also. So we believe that Indonesia is also a place to be in. And what do you think is Philippines? Beautiful also. But here in the Philippines, it's more fun, right? So look at it. Look at this. Beautiful. Right? So that's the reason why Dr. Berlegas was saying is that even if you elect anybody, including Pacquiao, the Philippines will still be all right. I don't know about the stock market though, but you would see that because of the OFW money coming 25, 30 billion a year. BPO is about 16 billion today. From another 5 years, it will become 25 billion. We're talking about 50 billion coming in every year. The sad part about all this is that the foreigner investors loves the Philippines, except the Filipinos. Because the Filipinos are the one leaving this country and sending the money over. That's the sad part. But can you imagine if we can really put our act together, right? And build the Philippines. Infrastructure for tourism, opening up the mining, right? The Philippines have three things. Indonesia has mineral resources. Foreign direct investment is just $20 billion. Philippines is 25 billion by the human resources, by the OFW. Thailand is 20 million tourists. In spite of the coup, there's still 15 million tourists that went there last year. Philippines, we both have what? A lot of mineral resources, beautiful islands for tourism, and beautiful people, human resources. That's our asset. We have all three, while they have only one. Indonesia is mineral, Thailand is tourism. So can you imagine if our government put our act together? I really believe that the Philippines is the best place to be. Let's move on. This is what April said. We're entering where sixth demographic window is a period where the working class forms a majority of the population. History shows that it leads to extended period of high growth. This is what happened. Right? 5 years before, the GDP growth was going 6-7%, and this is what really happened. Look at Vietnam, 9% to 16% GDP growth. Powerful. This is the per capita. Today, the Philippines is $2,700. Look at our competitors. Look at Japan. Japan is about $40,000. US is about $50,000. Still a long way to go. If we can just increase 30% to $3,500, can you imagine what can happen to the Philippines? So, it's all about middle class. April showed you a while ago that we're in that sweet spot already. Economies of small middle class are highly polarized because of inequality. Tough economic political issues remain unsolved. Politicians focus on redistribution of resources or subsidy taxes rather than economic development. A consensus will give rise to the benefit in needed infrastructure. So what we call aspirational class. And look at this chart very carefully. Look at this. 2009, 2020, 2030. Asia Pacific is 28% in 2009. 2020 will be 54%. By 2030, Asia Pacific will dominate the world, 66%. So please, you have to be in Asia Pacific. You don't want to be anywhere in the world. Because by 2030, the population in the Western Hemisphere will shrink completely. So look at this carefully. This is dying population. Europe, the same, down, going down. Central America, still good. Asia Pacific is 54%. And that's what it's all about. Demographics. And look at this. Middle class consumption will become also the same. 32 billion. 32 billion for Asia Pacific, 60%. All right? So let me close. Of course, we gave a summary already. So I think you guys have to understand that just by looking at this few slides, you can see why you want to be in the Philippines or you want to be in Asia Pacific. Because this is where the growth would be up to 2030. I think I told you guys already, the market when we were here in January, we're somewhere in 5.8. Now we're 6.869, which is our 2014 target. We've reached our target, and of course, as we reach our target, we want to see what is the next year EPS growth. And of course, April have shown you already, the target is 7,008, 13 to 15% EPS growth. All right, so I really don't know whether this thing can go down to 6.5 or 6.7, because if I know, I just told you a while ago, I'm going to be very rich. Since I don't know, but I know that there's the magnitude. People who bought here can sell at any price, and even if the prices have gone down a lot, like Mega World, for example, they're still making money from the year to date. So we like prices to go down so that we can have opportunity to be able to buy at a much, much cheaper price. All right, let me end by sharing, of course, the famous Jesse Livermore. There is nothing new on Wall Street or in stock speculation. What has happened in the past will happen again and again and again. This is because human nature does not change, and it is human emotion, solidly built into human nature, that always gets in the way of human intelligence. For this, I'm sure. Thank you very much.